record year for us. However, if you look at what the economy needs, it needs much more than that. We're coming in a period where we're not entirely out of the recession. I think technically we are, but we're not entirely there. The level of employment is still very low. So it's important that as a development finance institution, we play that leading role, that catalytic role, to say how we help assist new entrepreneurs or those that are existing, that they can expand, which is why then we've increased our level, and hopefully we can even continue to do that. The sectors really that are benefiting this side this time, 30% goes to the green. I mean, it's a new area for us, as we did indicate right at the beginning that this, when we planned that we're going to be committing about 100 billion over the next 5 years, that we're seeing the growth in that. It's a new area for South Africa, but it's also an opportunity for us to look at the localization. I think the manufacturing, which is going to take about 25% of the approvals this year, it's one area which we know it's still continuing to lose jobs, and it's important that we do that. And on the mining and beneficiation, it's about 28%, and which is an area which we have to continue to look at. In spite of the challenges, we've seen some of the commodities prices has been softening, but because we are long-term players, we take a long-term view. It's important that we come in when times are tough, so that we can give confidence also to private sector to continue to invest. Yeah.
Of course, you have this distress fund, and part of your business is going in and saving businesses that are going through a rough period. How much money actually went into saving businesses during this time around, and which sectors are really battling?
Well, for this year, in fact, because we've made that commitment over a number of years ago now, where we had put in 6 billion, just over 6 billion. We still have about 900 left. I think for this year, it's been modest. I think it's about 1 billion rands, which we've seen that's been invested in the distress. It's important, I mean, because there are some of the capacities that if we don't do anything, that could be lost. I think one notable one which can be looked at, which can highlight, is the PG class, where it's a big one, where as a result of exports and all of that, I think it did find itself in a challenging situation, but we as IDC were very happy to assist it. And the other sector that we still find it's facing problems, the textile sectors. I mean, there it's not only the funding that we've put in through the distress funding, but also we administer a fund on behalf of the Department of Trade and Industry, where we assist these textile industries to be competitive, looking at them how they best modernize some of their equipment, because we know in terms of job creation, they're the ones that create more jobs. Yeah.
You talk about the green economy, and of course, you're just looking at the sector breakdown. I mean, 30% of funding going towards green energy projects or renewable energy projects, 5.2 billion rand extended for renewable energy projects in the first round of that bidding process. Is it attractive to invest in the sector? Can you tell at this point in time whether you're going to, from an investment perspective, be able to reap the rewards? Well,
when we've looked at the response when the tender process was out, even on round 2, which is out now, to us we are indeed convinced that this is indeed an area that is attractive. But also, if you look at the caliber of people that have come in, so people with experience, because in terms of technologies, it's been international companies, and some of them we've partnered with them. To us, it shows that there is indeed an opportunity where people think they can be able to provide and have sustainable businesses in there. That's why we're participating. Also, a point to make is for our participation, really, we're looking at also the communities around these projects where they are. So when the communities will be shareholders in that, I think that's a point that we want to make, that indeed that happens. Yeah.
When it comes to projects outside of South Africa, I mean, 16% of your funding over the past 5 years has gone to investments on the continent ex-South Africa. How much further do you want to start growing your presence on the African continent, and what type of projects are most appealing to you?
Well, I think it is important that South Africa is not only an island in terms of economic activity, that way it only prospers and its neighbors don't. I think it's important because we see then what happens. There's a lot of interdependencies. And hence, when our mandate was extended in 2000, I think one of our aims is really to ensure that what we call regional integration we do indeed foster that. 16% in the scheme of things is still relatively modest. I think there's still room for us to can do a bit more, and we will continue to do that. I think what we find is for the continent, at least for the rest of the continent, some of the projects that we look at, because of the relative nature of where they are in terms of industrialization is concerned, and you'll find that infrastructure is one, be it energy, be it communications, telecommunications, but also on the mining side, I think we still see there's a lot of opportunities in terms of resources. What we will have to continue doing is look at the beneficiation thereof. I think there's also one area which we're looking at is on the processing side. I think agriculture, the content is very strong, but on the processing of some of those agricultural inputs is one area that we would like to believe that there's an opportunity, and we're seeing opportunities there.
When it comes to opportunities, and the infrastructure program in South Africa is said to really present major opportunities along the supply chain, are there any areas in South Africa where we don't have the skills, we don't have the businesses that are able to, help government and state-owned enterprises reach their capex programs?
Well, the announcement by government in terms of ensuring that there's this infrastructure spent, not only by government itself, but also by the state-owned entities, provides a good platform for us to look at our capacities as South Africans, as South African companies, to say where can we increase that capacity. That's where then as IDC we play in a role, because we want to see the localization aspect of it. Because if we're not careful as a country, we might have all of this infrastructure spend, which we spend so much money, but we don't create the industries and that. So it's at the back of that we say we're looking at all the requirements that are there in terms of talking to the state-owned entities to say what are the requirements, what inputs will be needed in that, and then we as IDC will work with private sector in terms of ensuring that we help fund them where there's a need for them to increase their capacity, we do that. Where there's a need for them to build new capacities, then we can be able to do that.
1 year down the line, 13.5 billion extended during this year. How much bigger can that number get?
This economy needs much more. We're hoping this 13.5 will be leveraged even much more, in terms of the investments that are there.
Do you have a target?
We're looking at 15 billion next year, so hopefully we can even surpass 15 billion. I think, remember, the target for us is over 100 billion over the next 5 years, but obviously we're not going to be reckless. I think it's important that we build sustainable businesses. I think it's important that we do that.
Because you talk about impairments rising as a result of the increase in lending. Impairments going up to 1.6 billion rand. So how do you weigh up that relationship in terms of taking on more risk and then, of course, hitting the impairment line?
The impairment line is a very important line. It's an indication of how early stage we go, because there's a level of uncertainty. The expansions as well, there's a level of uncertainty. But also in terms of how diligent we should be, because otherwise some of those investments, then if you're not careful, they might not actually see the light. So it's not only the money that you lose, but also the jobs that you want to create. So we have processes in place here, of which we engage with the board to ensure that that number doesn't run out. But also we don't want to be discouraged that we don't do early stages, because in terms of the accounting principles, we have to, once there's an element of uncertainty, we have to reflect that, which is why we reflect those numbers. But I think it's important that we continue to take risk, because when you start things, and if we don't do that, if you don't start things, it's difficult to attract other investors. So we have to create that confidence, not in a reckless way, but in a nice and measured way, so that then the other funders can feel comfortable to say, okay, now the cushion has been softened, then we can move.